Hey, it's Monday, 17th of July. Thanks for joining me again this week. Last week, we looked at gold. Here's the chart of gold on the hourly. I talked about the inverse head and shoulders pattern, which could be a bullish pattern and a buy signal on a break above 1930. We got that last week. On Tuesday, when we really took off, I talked about the longer term picture for gold, which is actually quite negative. I talked about the short term picture for gold, which contradicted that, and how gold was likely to push higher. And indeed we did. We actually got up to 1964. So there was a good $35 jump in gold last week. And I really hope that you managed to capitalize on that and watch the video. I got more views for that video than I do normally. So I really hope that I helped you. If you want to know what I'm saying for gold this week, you're going to have to subscribe to my gold, silver and oil subscription package and get the analysis and signals each day this week. Okay, I'm going to move on to the dollar now. This is the weekly chart for the US dollar index, showing a nice clear uptrend since around 2008. So about 15 years, the dollar has been in this bull trend with plenty of periods of sideways action, which you know I don't like. Now, more recently, we're seeing a correction to the downside. We have just broken out of this little channel here, which I'll show you, and it does look like the dollar could correct further. Certainly the dollar index could get down to 98.25, 97.90 area. Let's have a look at it on the daily chart. Doesn't look quite so bullish, does it? When we look at the daily chart, going back to September of last year, you can see big moves to the downside. This sideways channel, sort of a triangle pattern really. Now we've just broken to the downside of this triangle pattern. Look at the gap that was left when we broke below the 500-day moving average on the dollar index. We immediately got a big red candle to the downside, and then we broke below the previous little swing lows that we had here. That was at 100.82. This was at 100.78. As soon as we broke that, we had another big red candle to the downside. It's looking pretty negative. We could get a little bit of a bounce back because the market is quite oversold on the daily chart. But if we got anywhere near the 170, 180 area, that would be very strong resistance for the dollar index this week. Aussie versus the US dollar is still stuck in this horrible sideways channel. And it's a similar picture for the New Zealand dollar versus the US dollar. That's a bit of a mess on the daily chart. Not much I can really do with that. But the euro and the pound are showing some very clear trends. Let's have a look at those. This is the US dollar in a negative trend since 2008, but we're seeing a more recent recovery. So let's zoom into the daily chart now. See that nice run up from September of last year in the euro versus the US dollar. Most of this year, we've been in this horrible sideways chop. Moving averages have just started to flatline, but we've broken up. We beat all the previous highs and now we're pushing up. We do have resistance from this trend line that goes back to September, as you can see. I warned my subscribers about this on Friday. So this could cause the market to turn around a little bit, have a correction to the downside. We are getting overbought on the daily chart. I'm just looking at the 4-hour chart. We're very overbought on the 4-hour chart. So maybe at the beginning of the week, we will see a correction for the euro, the downside, but I will be looking to buy into support levels. We've broken out in this channel. We've even beaten the 200-week moving average. I think this all looks pretty positive for the euro versus the US dollar in the longer term. 500-week moving average, the green line at around 114.5 would be a reasonable first target. That's a couple of hundred pips or more from where we are at the moment. We will, of course, need to beat this trend line, which is around 116.5. If we do that, then we do have a really serious buy signal that would take us out of the channel. But for now, I do see us testing the upper parameters of this downward trend. Cable, the pound versus the dollar, is really interesting. When we had the Liz Truss drama and the pound collapsed, I did make a comment that wouldn't it be amazing if this was the mother of all double bottoms? And it really looks like it could be. This market has taken off lately. Look at the monthly chart for cable, really good recovery for this year. And we are about to test some important resistance levels. We've got the 100-month moving average at 132.37 and this downward sloping trend line, which goes back to 2015. So that's a nice 8-year-old trend line at 133.30, 133.40. We're not too far away from that now. We've beaten the 100-week moving average. Look how it was resistance around middle of May. It was resistance, then we broke up and it became support. The 200-week moving average also acted as resistance. Now we've broken up through there. So I would imagine that will be support if we do see any retracement in cable down at 129.00, 128.80. But that would take a 200 pip drop. So I don't think that's going to happen. Chart shows that bull run that we have been in since September. Got a nice trend line down at 129.80. If we dip that far, and as I said, around the 129.00 area, there is really good support Not sure if I see us going down that far, but you never know. We are quite overbought on the daily chart, so perhaps we are in need of a correction before we start the next leg higher. Dollar Swiss chart isn't something that I normally look at. I don't really trade it. It gets quite boring. Dollar has been in a bear trend against the Swiss franc, and it looks like we could be starting a new leg lower. Look, we've been trading sideways for about 8 years in this channel, and it looks like we're breaking to the downside. So the dollar really is coming under pressure. A bit clearer on the weekly chart, you can see we're trading well below all the moving averages, but breaking that trend line at 87.50, I think it's pretty significant, and the market did tumble very, very quickly, very significantly last week. You can see again how swiftly we moved to the downside. Yes, we have got oversold, so the dollar is oversold against quite a few currencies now. We might get a correction. I'd love to see it up to 88.00. I think that would be a great sell opportunity, but we would need almost a 200 pip rally for that to happen, and I think it's unlikely. Okay, so quite a negative picture for the dollar. I hope that's helpful. Please leave your comments below and give me a like, a share, and a subscribe.